Good day folks, Jim here from Orchard Forex. It is Wednesday the 27th of May. Most of the currency markets recently haven't been doing an awful lot directionally. Look at the euro, it's fairly typical of the EU majors, and the yen, they're also in the same sideways stuff, so I'm not really going to spend too much time. That's the yen, and sterling equally choppy. But the Aussie and the Kiwi have had a decent run higher. I've been long Aussie yen and I got out of it yesterday, although it is a bit higher today. But the Aussie is coming up here against some decent resistance at 66.70. It did get up there overnight in the States, but as you can see, we're running into the 200-day moving average and also the 74% FIBO pullback of the whole dip down to 55 cents. If we do see a daily close above here, then I think we probably are going to go higher. But in the meantime, and that really depends on risk sentiment and the stock markets moving higher. In the meantime, though, just for a short-term trade, I've sold it up here at around these levels, looking for a bit of a pullback towards 66 cents, maybe a little bit lower, so 65.80. The 100-day moving average is down here. It's down at sort of just below 65 cents, really, so that's not really in play right now. But it wouldn't surprise me to see the Aussie bounce around in this area. Having said that, the dailies are beginning to point a little bit higher, as you can see, albeit the RSIs do show very minor divergence, as so do the stochastics. But the momentum does look to be building pace. The weeklies also are beginning to push higher. But once again, we're going to run into weekly, that's a 55-day moving average. It's just above 67 cents, but coming lower. So I'm a little bit two-way on the Aussie at the moment. It really depends on where we end up over the next sort of 24 hours. If we fail to break above this sort of 66.70 level, then I do think we head back to 66 cents, possibly a bit lower. A daily close above there, though, suggests to me that we've got further potential upside. Pretty much the same applies to the Kiwi. The dailies are beginning to point a bit higher. Actually, with the Kiwi, we've broken above the 100-day. We've got a bit of space to go before we get to the 200-day moving average. That's moving lower, and it's going to come into line with this 61.8% FIBO level, which is sort of 62.60. I do kind of like the Kiwi still. I think as long as stock markets stay healthy, and we'll look at them in a minute, I think there's probably more room on the top side. And the weeklies, although you'd probably call neutral to pointing slightly higher. But the momentum does seem to suggest that we could push on. We've also got bigger degree of FIBO resistance here, that's around the 62.60 level. So it wouldn't surprise me to see that targeted. On the downside, if the Aussie does fail to push on higher and comes low, that'll bring the Kiwi down with it, and we might see a move back towards sort of 61 cents, maybe a tad lower. The other real interest, of course, has been in the stock market, so we'll go and have a look at those. Okay, here we've got a chart of the 4-hour S&P. Now, it's back at 3,000, unbelievably, really, given where it was a couple of months ago, down here at 2,100. So we're getting back to levels that we were at the beginning of March. Now, the daily charts do look slightly positive. Once again, though, as with the Aussie, we're running into the 200-day moving average, but a daily close above that, we're right on it at the moment, would suggest to me that we've got further top side to go. The weeklies do look very positive still, so I kind of think that's going to be the way. The monthly charts blow that up. They're obviously pointing lower still, so they've yet to react. But going back to the 4-hour charts here, the thing about the 4-hour charts that I think we might cause a bit of a pullback is that we are seeing some bearish, very mild bearish divergence here. So, and this is just a 4-hour chart, so a bit of a pullback wouldn't surprise me. Perhaps to this sort of 61.8% level, which was previously resistance, now turned to support. That's down around 29.30, and that low down there sort of 29.05 or so. So I'd be a buyer down there. Longer term, I do think we can head higher. I mean, with the world economy being the way that it is, it seems mad that the global stocks are going higher. But with central banks pumping so much cash into the economy, we've got to find a home for it somewhere. And with zero interest rates, it seems to me that stocks should probably remain relatively underpinned, particularly those that pay decent dividends, although they're likely to be few and far between this year. So that's the S&P. I'll just have a quick look at the Aussie stock market too, which I kind of like. It's pulled back a little bit this morning. It got up to 58.15 yesterday, the SPY 200. It got up to there. It's back a little bit this morning. Banks are much higher today, though. The banks are up 7 or 8% today, which is supporting the index as a whole. Everywhere else is down a little bit. But the dailies are looking positive. The weeklies had become very oversold, and now they're all turning higher. So I do think that we can take out this. We're at 50% level, the pivot of the whole move down here. So we're struggling there a little bit, but it wouldn't surprise me to eventually take it out on the top side. And the 200-week moving average is up here at sort of 29.50, 29.70, something like that. So I think that's the direction of it. I'd be a buyer on dips, as I say. And as far as levels go, probably down at this sort of over the next couple of days, so 5650, 5700, somewhere around that level. I'd be looking to buy for the next push higher, which could see us to head towards this 61.8%, I suppose. Eventually, that's up at 6100. Long way to go before we get there, but there doesn't seem to be an awful lot of resistance ahead of that, apart from, as I said, the 200-week moving average and the 100-day moving average at just under 6,000, really. So I suppose that's a fairly obvious target. So buy dips, and as I said before with the Aussie, if we do see the stock markets come off, the commodity currencies will come lower with it. But in the longer term, I do suspect they are still a buy. So if you go and look at I'll go and look at the Orchard Forex website, I should say. I do put a daily trend table up there of my thoughts of where the currencies are going to be going over the next 24 hours. So if that's useful to any of you, please make use of it, and sign up to the YouTube channel as well. It all helps. We'll leave it there for now. Thank you very much, and talk to you next week probably. Cheers.